what you need to do is you make sure that you're in the business with people that have been in the business and that they've chosen this as a career, not as a, hey, this is the hot thing for the moment. So network auditing and network management and creating that network of critical importance during the pandemic, because we all could call and lean on somebody.
Alrighty, folks, it's time to look in the mirror. It's time to revisit investing in the pandemic. And what I want to do with the three amigos today is highlight 12 nasty investing lessons from the pandemic, because I think a lot of us need to understand what happened. Because again, folks, we will go through recessions. We will go through bad times. We will have the Fed print money again sometime in the future. So if we don't learn these lessons, we could make these mistakes again. And I always like to go in the order that people showed up. Matt, you were the first one to join on this. What is your first investing lesson from the pandemic?
Cowards lose.
Tell me
Cowards
more.
lose. So, we had all talked about it. We were all kind of going through the three of us were kind of going through the pandemic, in different markets.
Yep.
But one of the things that everybody was quickly doing was it literally put a pause on everything. Everyone stopped doing everything.
Yep.
And they're just like, oh no, everything's going to crash. Does it sound familiar? Everything's going to crash. I don't know what we're going to do. And it's the end of society as we know it. And my thought process was, if it's the end of society as we know it, then I can die broke. That's fine. Like it is, like everybody else isn't going to be able to pay their bills either. Right. So if you were a coward and you looked at it and you were just like, I think we're just going to wait. I think professional waiters, and not even like, here's a tip for the professional waiters out there. Understand the market, know what you're doing, seek out a bunch of information and knowledge. And when everybody else is doing something else or the same thing, they're all doing the opposite, then you wade in, because that is how the wealthiest people in the world have become the wealthiest people in the world. And it's not saying that you need to measure things with 3 commas, but you sure as hell can measure them with 2.
Right. And it's fun. It's funny you bring that. It's funny you bring that up, because a lot of the professional waiters, as you called them, are still waiting.
Yep.
Right?
Sure.
They never gave up on that.
Well, the stink of loser remains, right? And it's one thing to basically just only be in this self-indulgent universe of, fear porn constantly being poured into your mind. And oh my gosh, what about Florida? I don't give 2 rips about Florida. I don't care. I care about my market, what's going on in my market. And am I seeing some softness in some areas? Sure. I expected softness, but at the end of the day, I don't lose 15% when I've gained 70 or 60. Right. It's okay, guys, but yeah, professional waiters, they continue to wait.
All righty, Dion, there's a little passion in that first one. Matt came in hot.
I know. How do you follow that? We almost had the trifecta. Within 45 seconds, he was calling people cowards and losers.
Yes. Yes.
You were missing just one to get it. But and I actually thought I was going to be the optimist in the 12 nasty lessons from the pandemic, because my last one is actually how I got my last deal. Like, because of these changes. So the first one I'll start with, and this is a big change that happened in society. And if there's any nerds in the audience, I'm going to relate it to something. If you've watched all the zombie movies from the 50s until 2004 or so, you get bit by a zombie to become a zombie if you die. Yeah. Then The Walking Dead comes out, and this changed the entire genre. In The Walking Dead, everybody's infected, and if you die from anything, you become a zombie, no matter how you died. Now, since then, every single zombie movie has been everyone's infected. If you die, you become a zombie in the zombie apocalypse worlds. It was a subtle change in one event that completely changed an entire world outlook. This is what happened in 2020 during the pandemic. Up until 2020, we can't even remember you used to have to be bit by a zombie. Before 2020, a lot of Gen Xers had every 10 years, there's a new reason why the world's going to end, right? The world's going to freeze. We're going to run out of oil. The world's climate change has changed every 10 years. So much so that people would say a stock market crash, a prolonged government shutdown, or eventually we might have a pandemic will be the end of everything. investor confidence is through the roof, like it's never been in our entire lives. In 2020, we had the big boogeyman, the pandemic that everyone always theorized about. And the government said, we got your back. Here's a bunch of free money. We're going to print a bunch of money. And then what actually happens on my next one that I'm going to talk about, it's a good thing for certain people. Not for everybody, but for certain people. So that was my first change with the pandemic is investor confidence is higher than it's ever been in our entire existence. Yeah, there's crash bros and yeah, there's people waiting, but everyone is sitting now thinking, even if like nuclear war happened tomorrow, the government would just print money. The government would have everybody's back. We've never felt that before. And now it just seems part of normal day that stimulus and those kind of things would happen.
Yeah. So I think I know what your second one is going to be. So I'm going to skip it on my end so I don't take it from you. I'm going to go with this one. Shiny objects can hurt you. And the really where this one felt to me, there's plenty of examples out there. I guess I'll give two. One of them was when Airbnb took off. 2022, there were lots of gurus running around talking about Airbnb. They were saying really hurtful things like you're a boomer, you're old school, nobody could do it that way, yada, yada, yada. And lots of people raced in and now are losing their ass. Right. So shiny objects can hurt you. Another one is all the syndicators. A lot of syndicators made some great money, 2020, 2021, new batch of them rolled in. And, those LPs have predominantly lost most, if not all their money going forward. So one of the things you have to learn about real estate is shiny objects can hurt you, right? It can distract you. A lot of people get taken off mission, right? Think about being a buy and hold investor for 5 or 6 years and then going, oh, I'm going to pivot to short-term rentals. Well, maybe you're in the wrong area. Maybe your city does this. Maybe your city does that. It's shiny objects, they really can be fool's gold. And I think shiny objects take people down. And I hope people remember that. If you're on a path, a declared path, just keep going. So that's my first one. Matt, what do you got number two?
So number two for me is, one of your 7 rules, which is your network. And if you have a network in place, people that you're used to dealing with, people that have been in the foxhole with you before or in the trenches with you before, to not steal valor. But if you've been in that space with them before, I mean, we have relationships as long as 20 years ago that we still have, you and me, Zub, and Dion for, over a decade. But in the last, 14 years, it's only gone up. Right. And so you've not had to go through the fire with any of those relationships per se.
Right.
So the sooner that you start building relationships, and what's really funny is a lot of the people that I built relationships with 20 years ago, they were reps. And now what are all of them, Zub? They're
VPs.
All VPs, and some of them are senior lenders.
Yeah.
And so now these people know me and they know that I'm a known entity. They know I'm a buy and hold guy. They know that I run my business conservatively. So start relationships now. Start making sure that you're working with people that are like-minded, that have some nuts, because here's what you will find. There's a lot of agents that no longer work and do any more work. And so if you're using a buddy or a friend, they're probably a piker. They're probably gone. They probably don't do any volume, whether that's a real estate broker or a banker, or a mortgage person. Guess what? A lot of those people are gone. They're gone. So what you need to do is you make sure that you're in the business with people that have been in the business and that they've chosen this as a career, not as a, hey, this is the hot thing for the moment. So network auditing and network management and creating that network of critical importance during the pandemic, because we all could call and lean on somebody, and we were getting, I did 19 deals and I did 23 deals in 19 months.
Yeah.
The bankers didn't flinch. They were just like, you're the only one calling us right now. And I was like, good.
Good. I like that. Yeah.
I love that. So what you're saying is my rate's going to be lower.
Yeah, exactly. So I'm going to get a good deal, right? Yeah,
exactly.
All right, Dan, what do you got for number two?
So this one is learning who my best friend was in 2020. And yes, I've got some humans that are friends. But in 2020, I realized if you invest the right way, or not the right way, a specific way, inflation is your best friend.
Mhm.
It flat out tripled my net worth. It increased my cash flow. The idea of gross versus net, when you have a gross, like even a small change in gross, it has a huge impact on net. Up until then, I had said I invest in Class C properties. If there's ever a recession, there'll be more demand on my properties. There'll be people from Class B and Class A who will want to downsize or save money. And yeah, so in a recession, there's more demand on my properties. That had been my mentality. But investing in a high cost of living area, right? I invest in Washington State. I could have gone at a distance too. This is the highest appreciating state in the country for like 4 decades now. And I don't touch my equity. I've not done a cash out or a HELOC or a 1031. But at some point, I could now just sell everything and struggle to spend the money before I run out of life.
That is a great place to be. What I like to say for that one, and I'm glad I skipped over it, is frankly, asset owners win.
Yep. Oh
Right.
yeah, always.
Asset owners win. All right. Which one do I want to do next? I will do this one. This one always gets my goat. Bigger is not always better.
True.
Better is better.
Mm-hmm.
Right. So what do I mean by that? Break that down. So you guys know that I talk about yield. Matt, you talk about return on capital. Dion, people talk about cash on cash. I don't care what you call it.
Yep.
How much cash goes in and how much cash comes out of said asset.
Sure.
And, since day one, it's all in my course, How to Get Started One Rental at a Time. I want you to put all the assets on the same spreadsheet. And I only could talk about what I do. I have a 512 square foot, 1 bedroom, 1 bedroom, 1 bath house, and a 20-unit apartment building. I would put those same exact things in the spreadsheet with the appropriate adjustments for taxes, insurance, turnover, reserves, all of that. And I would buy whatever the best deal is. Sometimes it's the house. Sometimes it's the apartment. These people that scream bigger is better, and unfortunately, the people that listen to that are about to learn that bigger isn't always better. And there's going to be some significant losses taken. So that's my number 2.
Yeah, I think certainly when you talk about that's really debt structure, right? And a lot of them were just taking whatever debt that they could get. And they're just like, doesn't matter. It'll cash flow. Doesn't matter. And now they're getting crushed. There's plenty of guys that thought bigger was better, or there's some guys that thought bigger was better, and they've done pretty well because they cared about how they were acquiring their capital. And that I think that's the biggest difference for me. My third one is people spend a lot of time learning, and they spend a lot of time aggregating data. So I watch a ton. I read a ton, not books, but I read a ton and I watch a ton. And that is always, 40 different ways that I'm essentially creating my belief. And the issue is that people, once they've done that, or when they're doing that, you have to have the stones to act on that. Because how many people know all the moves and make none of them? It's one of my favorite lines out of a movie called Rounders that had Matt Damon. It was a poker movie.
Yeah, I saw that.
And he's sitting there at the end and he's talking to this guy, Kanish. And yeah, he's up a creek and he is screwed if he doesn't put some scratch together to take this big game. But he's done all the work. He knows he can beat the guy. And so he just says, I need that beat. And this guy, Kanish, all he does is yell at him and say, I gave you a chance at a living. What living? Like in a delivery truck, delivering cigarettes to corner stores in New York? Like that's my living? And so that's what he was okay with that grind. I still do it. This is what I do. This is how I do it. And Matt Damon wanted a shot at the ring. And so he knew he had studied himself approved. He'd done the work. He knew what the path was. He said, I'm going to put all in because I believe I really can beat this guy because I've got more information and data than he does. If he didn't play that game, he would be stuck in that truck for the rest of his life and always wondering what I could have been or what I could have done.
That last phrase, I'm so glad you said that. It's the death is wondering what could have been.
That's right.
That is what would eat me alive.
Oh yeah.
If you didn't take that shot. All right, Dion, what do you got for number 3?
So this is something I specifically learned during the year of the pandemic. And I credit you with this every time I bring it up. From 2013 to 2020, about almost every other year, I was buying a property. And I was really looking for yield. And, math is one of 20 aspects to determine whether a property is good. I would go, what's in the area that I like, what's in the area that I don't like, how's the parking, does it have aspects that limit tenant turnover, is it pet friendly, is it, I go through all this stuff and include the math. And in 2020, I closed on my fourplex, and then the pandemic, eviction moratorium, stock market crash, all these things started happening. And in the daily financial news, you mentioned something I had never really watched, because as far as I remember, interest rates from 2013 to 2018 went from 6 to 7.5, pretty much across the board. That's what I was getting on my either owner occupied or investment properties, small multifamily. And so I just okay, interest rates are that range. What are my rents? Let me calculate the yield. And so in 2020, I kind of sat back. Like a lot of people, I heard the Crash Pro videos coming up because they had a lot of new ammunition. And you said, anybody watching what's happening with interest rates? It had just been, my entire investing period had been a range, a small range of 6 to 7.5%. And in 2020, it was like, okay, I'm hearing 4. Like, that's huge. 3 point something? Wait, I can get a 3 on a. So I emptied out my retirement accounts because of what I call window of opportunity, which I hadn't used really as an investing strategy. I try to invest in what's called evergreen. Evergreen investing is, at any point in time, a long-term buy and hold cash flowing property will get better and better over time. So I've avoided the BRRRR, which made sense. Well, flipping on the BRRRR made sense when prices were going up and interest rates were slowly trending down.
Yep.
That's not happening now. So it's out of season. So I try to avoid things that have a season, but now I look for windows of opportunity. So in 2021, it came from the lack of competition. There was a window where everybody was going, forbearance is ending. It's going to flood the market with foreclosures. And so I saw deals sitting on the MLS that cash flowed. Like there were 2 right next to each other. I tried to get a friend to buy one. The exact same amount of money down. It's been over 100% internal rate of return. It's about a 17% cash on cash return now. And he didn't pick it up because everybody gave in to the fear. So since then, I've been watching for windows of opportunity, which gave me what will be my number 4 and how I invest now.
I love that. My next one, I'm actually going to credit Coach Carson for kind of putting words to this. I know lots of people have talked about it, Dion included. And that's just asking yourself, what is enough? Right? As a type A individual who's used to going 100 miles an hour, it's really easy to change the goalpost, especially when you're in a career where the goalposts are changed every 12 months, right? It's like, oh, I scored a touchdown. Oh, shoot, it's farther away now.
Game over, next one.
Yeah, it's just, oh, great, new game. But, and the score's 0 when you start.
Yes.
I digress. But it's really, I wish more people would take the time to sit back, perhaps work with their significant other if they have one, and really dig into what is their desired life cost, right? I have this course called Get Your Money Right. One of the things that both of you went through with me when we did that is like, what would your ideal life cost? What would the Mac Daddy cost? And what's the minimum? Remember that from 4 years ago or 5 years ago?
Yeah, it's long.
And I wish more people did that.
Yeah.
Because if you really understood what your life costs, and I'm just going to pick a number, $7,000, whatever, try to be balanced for the country. You don't retire when you're got $7,000 in cash flow, because that's just a recipe for disaster.
Yes, it is.
But maybe 14, certainly 21, right? It's some factor on your life. And then plant that flag and go get it, right? It's not going to be here today or tomorrow or next year. But if you do this for a decade, I like your chances. And don't move the goalpost, right? What is enough? I really love, Coach Carson's talk from our first ORaaT event. And understanding what is enough. And that's really gave me peace, because I have comparison syndrome. I speak at big events with people, who have private jets and, all of these things. And, every once in a while I find myself oh, what if I stepped on the gas one more time? And then I remember I just spent 3 weeks in Asia on a 6-star cruise ship. And I'm like,
exactly.
I'm good. I'm good.
Exactly. Exactly.
So yeah.
I think you geriatric retirees have really hit your stride with your cruising and your month's vacations. I'll get there someday.
There you go.
My number 4 is kind of like one of Dion's. Dion, I think said it the best, which is you're going to be alive in 5 years, invest like it. I think that so I'm sorry if I stole one of yours, Dion, but you had plenty. But the idea behind it is that I found that I was always, so when you work in a business and when you're an executive, you're always having to think either very often the roles are split, which is strategy. And then there's the first line people, the second line people that are covering tactical, right?
Yeah.
Mm-hmm. And so one of the things that I coined as a phrase when I was going up through the ranks in these businesses was I said, you need to be strategically tactical, which is this understanding what your strategy is, but then tactically making the moves within it to accomplish that strategy. Most people often strategize and then think nothing about the tactics needed to accomplish the goal. Others go in there and they're just like, I'm going to show up and I'm just going to do. Well, congratulations on that. You have a much higher chance of failing if you don't just do a little bit of strategy planning. And so, Mike, you and I were in the same position back in 2020 where we were looking at it and saying, hey, we should probably start creating a bunch of dry powder for an event. And so you went through and you refinanced a ton of properties, 30-year fixed rate debt on commercial assets at 4% or 3.99. I don't want to take that 0.01 away from you. And I've got, 3 portfolio loans, 24 properties that we refinanced in order to fuel massive growth. We did that. We didn't do it in putting any of them in danger, saying we got to go to 95% LTV. We were 70% LTV. We made sure that everything had 20%, at least 20% margin. So we were signing up for making less from a cash flow perspective, but we absolutely obliterated the numbers because we got a lot more assets and we were able to put a significant enough down payment down that they actually all cash flow 20, 30, 40%. So I think very often people on the strategically tactical side of things, they're doing the tactical or they're doing the strategy, but they're not doing both. So when you come up with strategically, this is what we need to do. What do we need to accomplish our goals in the next couple of years? Well, we need to create more cash. We need to, reduce life creep. We need to do this. Strategy, that's what you're coming up for a plan. Tactically, now you have to execute on those things and make sure that when you create a strategy, that it has actionable steps as part of the strategy. That is how you end up. Success is a journey. It's not a destination. And so people don't show up 2 years later and go, haha, I'm ready. And you're like, well, what were all the steps you took? Well, we talked about them 2 years ago, and that was the strategy. That's not it. Tactically, what are the actionable steps that you're going to take to accomplish the goals in your strategy to get to where you want to get to? And I'll finish with this is I love it when I see people take my course and they've never, ever, ever invested in a property before. And they're the planners. They're the ones that are most likely to overthink things, but also typically succeed because they say, hey, we're making this investment in ourselves. We want to get things right over the next 12 to 18 months. When we start investing, we're going to have all the systems and processes in place for us to start the business, grow the business, and eventually be able to retire to the business. So that's where I think people need to focus.
Love this. Dion, all right, it's time for number 4, the one you've been saving.
So this one to me is it's kind of tied to the windows of opportunity, right? In 2020, it was watching interest rates. Not only was it acquire the next property because of the change in interest rates, but it was refinance everything else in the portfolio, right? They had dropped enough to do that.
Yep.
But the other biggest change is before 2020, the ability to work remotely was about 15% of the United States workforce could work remotely. And so there were people for a long period of time doing billing, doing data entry that can work remotely. During the peak of the pandemic recovery, it got up to 44%. So 44% of United States citizens didn't have to go into the office. It's dropped down now to about 40.
Mm-hmm.
But 40% of the people that can work remotely. And what this is a window of opportunity, because eventually it'll stabilize and the people working remotely will have confidence that they're going to stay remote. Right now, and for the last couple of years, there's been some doubt. People get a remote position and they think, okay, I'm remote, so they can move further out from the city, get a little more rural life that they were looking for, more space for less money. And so rents pushed up if you commute out a little bit from the city, 35, 50 minutes or so. But prices haven't, because of that doubt that they could be called back to the office. So this is that window of opportunity, probably for another year or so. But I think once somebody's been working a remote position for 4 years, they're going to start having confidence and thinking, okay, this is the new way of life. I can buy a house out here, and then prices will start to rise and you'll get that rent price unequilibrium going on again. So I'm hoping people have been watching that in their markets, and I'm moved out to 11 new markets, did some research, found 2 where I just found deal after deal after deal with the new rents versus the current slowly rising prices, and started making offers, got a deal, got accepted on another deal that I ended up backing out of. And I'll probably be picking up another property before the end of this year. And it will be in these pushed out markets where rents have pushed up, but prices haven't.
Nice. Well, I'm going to cheat and give 2. So technically we've had 13 lessons. The first one is fast money, which again, we had a lot of people making money 2021, 22, brings out the pretenders and the frauds.
Yeah.
You know, we have started to see people, if you follow the Real Deal and some other news cycles, having lawsuits. Some of them have already been convicted and put in jail. Lots of people are also pretenders. They were just Excel jockeys moving numbers around. They weren't practitioners. They weren't the lumberjack getting their hands dirty. They didn't know what was going on. Again, I've told the story about being at events in San Jose where people were trying to raise deal for apartments in Cleveland. They had no experience. They'd never been there. It was just like complete and utter nonsense.
Yep.
Those people deserve to lose.
Yep.
But this is the one I want to close on. And this is the one that I like about our combined audiences. Is I believe everybody that watches us for more than 10 minutes believes this. No one is coming to save you. No one.
Nope.
Not the government, not your family, no one. This is all on you. The pandemic, no question, was an unusual time. It is it's not surprising that a lot of people were frozen. I think if you're still frozen, that's on you, right? This has been 4 or 5 years now. But please understand, Dion talks about, I think Matt referenced it earlier, you're going to be alive in 5 years, invest like it. No one's coming to save you. There is no get rich quick. The getting wealthy is 3 steps: create disposable income, become elite at something, and then do it for a decade. I don't have, and of course I always say the 5 years suck. The first 5 years suck. You make mistakes. There's no compounding. There's no momentum, none of that stuff. So at the end of the day, folks, this is a hopeful message. All 3 of us want you to take positive steps. We're all here to help. We all give content each and every day to help the audience move forward. Matt, where can people find you?
Lumberjack Landlord on YouTube and on Instagram. And we're going to do the unveiling of our project house probably in the next week or so. I'm excited to do that. That was 16 hard-earned hours were put into that property. I know 16 is
it's terrible. Now 16 over what duration? Are we talking 90 days?
Yeah, about that. A little over 90.
Yeah,
Yep, a little over 90. So maybe like 120. But yeah,
okay.
It was the end moved very slowly, but it was just because we were using it as a stopgap. So it was something that we purchased where we're like, hey, if you guys run out of work to do, there's work over here that you guys can do, type of thing. But yeah, just so live streams 9 p.m. on Thursday night Eastern time, 6 p.m. Pacific. And I just answer questions, and it's a great community and a large part of this community. So we're just going to continue to answer people's questions and help them get off the schneid, because it's not easy, but it's absolutely possible.
There you go. Dion?
You can find me right here on YouTube, Dion Talk Financial Freedom, where my live streams are every Tuesday at 4 p.m. Pacific, where I talk about things like this week, how working in your 50s could be the biggest mistake you make.
Yes.
Got to tune in for that one. Got to tune in for that one, folks. And please don't forget to subscribe to this channel, but also join School One Rental at a Time. 350 amazing people going the same direction. It can be your network. There's 6 different masterminds, accountability groups, thousands of dollars in free education. Sign up today. Thanks, guys.
Ciao.